The psychology of stock market investing. Here are the lessons to be learned from this blog. Lesson 1. Psychology drives investing as much as numbers do. Recognizing biases like herd mentality helps Filipino investors avoid costly crowd following mistakes. Stay sharp and research independently to sidestep market traps. Lesson 2. Overconfidence can trick you into risky trades. Balance your self-belief with humility to protect your portfolio in the Philippine market. Anchor less on past prices and more on today's facts. Lesson 3. Loss aversion locks you into losers. Cut ties decisively to free up cash for winners in the Philippines. Don't let regret, aversion stall you. Act boldly when it's time. Lesson 4. Recency bias fuels overreactions to market blips. Focus on the long game to steady your strategy. Confirmation bias blinds you. Hunt for all sides of the story. Lesson 5. Diversify, learn, and set rules to tame your biases. These steps turn emotional investing into smart wins in the Philippine stock market. Reflect often to sharpen your edge and grow your wealth. Introduction to the psychology of investing in the Philippines. Welcome to the fascinating world of stock market psychology, where emotions and biases shape financial fates, especially in the Philippine stock market. Investing isn't just about numbers, it's about the human mind. Psychological biases are systematic errors in thinking that lead Filipino investors astray, from chasing hot stocks to clinging to losers. In a market driven by local optimism, global trends, and occasional volatility, these biases can amplify gains or deepen losses. Imagine the excitement of a market rally or the dread of a crash. These emotions fuel decisions more than we'd like to admit. Understanding biases like herd mentality, overconfidence, and loss aversion is key to navigating this dynamic landscape. In this series, we'll uncover how these mental traps affect Filipino investors and share strategies to outsmart them. Get ready to rethink your approach and boost your investing game in the Philippines. The power of the crowd and confidence traps. Picture this: a stock soars, and suddenly, every Filipino investor you know is buying in. Welcome to herd mentality. This bias drives people to follow the crowd, often fueled by FOMO. In the Philippines, think of the crypto craze. Many jumped in late, inflating prices until the bubble burst. Then there's overconfidence bias, where newbie investors, fresh off a win, think they're the next market guru. They trade excessively, ignoring risks, only to face losses when reality hits. Anchoring adds another twist. Investors fixate on past highs, like a stock dropping from PHP 100 to PHP 70. They wait for it to climb back, missing better opportunities. These biases spark market swings and personal pitfalls in the Philippine stock market. Watch out. Following the herd or overestimating your skills can lead you straight into a financial trap. Emotions that hold you back. Ever felt the sting of a losing stock but couldn't let go? That's loss aversion at work, a bias hitting Filipino investors hard. Losses hurt more than gains feel good. So many hold on to duds, like a stock falling from PHP 50 to PHP 30, hoping for a miracle. This stalls portfolio growth as funds stay locked in limbo. Then there's regret aversion, the fear of selling a stock that might rebound or missing a new opportunity. In the Philippines, this hesitation can mean clinging to declining shares while others profit elsewhere. These emotional biases turn investing into a roller coaster of doubt and delay. Imagine watching your wealth erode because you couldn't cut ties. In this chapter, we'll dive into how these feelings sabotage success and why breaking free is crucial for thriving in the Philippine market. Twisted thinking in a volatile market. Let's talk cognitive quirks. Recency bias makes Filipino investors obsess over the latest market moves. After a winning streak, they're all in, expecting endless gains until a dip wipes them out. In the Philippine stock market's wild swings, this can be a disaster. Then there's confirmation bias, cherry-picking news that fits your hunch. Love a stock? You'll scour forums for bullish takes, ignoring red flags. Social media amplifies this, creating echo chambers where reality gets drowned out. Picture an investor betting big on a tip from a trending thread, only to crash when the hype fades. These biases warp how we see the market, turning short-term noise into long-term mistakes. In this chapter, we'll unravel how these mental shortcuts mislead and show you how to see through the fog of a fast-moving market, mastering your mind for better returns. Good news, you can beat these biases. In the Philippine stock market, diversification is your shield, spreading investments across stocks, sectors, and assets cushions against wild swings. Education lights the way. Learning about biases and market basics empowers you to spot traps. Seeking professional advice? It's like having a co-pilot to steer clear of emotional nosedives. Set firm rules buy at this price, sell at that, and stick to them. No second guessing. Mental accounting, where you split money into imaginary buckets, can skew choices. So rethink that habit. Reflect on past trades. What worked? What flopped? This self-check builds sharper instincts. Imagine transforming from a reactive investor to a strategic one, thriving amid Manila's market chaos. This chapter arms you with tools to outsmart your mind and win big in the Philippines.